Welcome back. You're watching Markets Tomorrow live on ET Now. What exactly could influence and impact your portfolio tomorrow? Yes, markets will react to TCS numbers because numbers will come today at 6 o'clock. But apart from that, Axis Bank is also due to declare numbers tomorrow. Globally, US Fed Chairman Ben Bernanke tonight will be making a speech, and market curiosity always is very high every time when the Fed Chairman is due to speak. In terms of technicals, do monitor real estate stocks and high beta stocks because more than anything else, it's really the high beta pocket which did the trick for Indian markets. Real estate stocks, large cap metal stocks, some asset owners along with ADAG group stocks. Before we look at individual names, I just want to recap Axis Bank expectations, and in general, markets expect that Axis Bank will report a strong set of numbers for the quarter gone by. PAT for the quarter gone by could be up in the region of about 15 to 16%. SR Oil also, expectations are that this time around the company could come out with stronger net profits because global GRMs or global gross refining margins have been strong in terms of sales. Since the rupee was under pressure, based on a year-on-year number or year-on-year comparison, the company could report a huge uptick of about 78%. NIT Technologies, a mid-cap party company, again market expectations are pretty strong. Markets expect that for the quarter gone by, NIT Technologies could report a PAT number of about 55 crore. Dipan, what do you expect to hear from Axis Bank tomorrow?
Well, for sure, I think a good set of results is expected. They've maintained their net interest margins for several quarters now. There's really no anticipation of any change coming up there. There had been anticipation of probably some incremental provisioning coming in the last quarter or the quarter before that, either the June or the September quarter, but that really didn't happen on a significant scale. So obviously their provisioning is on stream, so no significant change expected there. Though some of the lending that they'd done was expected to be provided for. It seems the bank has also clarified that some of that provisioning has already been made in the past quarter. So no significant downside expected. I think on the other hand, a reasonably strong set of results expected coming in from this important private sector bank really.
Okay, CLSA today has downgraded ONGC, IOC and HPCL to underperform but not BPCL. So CLSA as a house is bearish only on IOC, BPCL and ONGC. The brokerage house is of the view that oil marketing stocks have rallied sharply in hopes of changes in fuel pricing. However, the brokerage feels changes will be difficult to implement given the way in the second half of 2013 we are pitted against 5 state elections. CLSA also believes that in the near term, after the recent run-up, most of the oil marketing stocks are priced to perfection. Anish, what are your thoughts on OMCs?
I think it is not as short a period as 2 weeks. Probably market will give them some more time, given that flows are dominating the current state of the market. So I would say if in the next 1 to 2 months, if nothing happens, then probably we should start seeing the wearing off of the impact of the announcements which they have done on the oil space.
Sandeep, to your mind, how impressive was today's late rally in HPCL, BPCL or for that matter ONGC?
Nikunj, is this for me?
That's right, Sandeep.
Well, I am not that impressed with this space. I would, if you combine, ONGC was impressive today. HPCL, BPCL, IOC, they will move up with the market is what I would say. I see a 4-5% trading upside, but I don't think they have any more upside than that. I mean, they won't outperform and give you a 10, 12, 15% upside over the next few weeks. A small upside, which can be termed as a trading upside, nothing beyond that.
What about DLF, Sandeep Wagle? Do you think today's 7% rally in DLF was quite impressive?
Well, Nikunj, in the beginning of the show, in the T20 show, we had a buy in DLF around 235 or so. And even at a close of 247, I still see some more upside to the tune of 257 to 260. So very clearly another 5 to 6% upside. And if it manages to hold there, sustain there, that upside could extend further. So yes, a very clear 5-7% upside even from the current levels.
Nipun, what are your thoughts on real estate stocks? Because if I map most of the real estate stocks, large cap, mid cap, even small cap real estate stocks, all of them are up a good solid 100 to about 150% from the recent lows.
Sure, I think there's been a significant run-up. A lot, obviously, on expectations that there would be a rate cut, and several of them would probably benefit out of it and reduce a lot of the inventory levels that they've really built over the sort of slack demand that was there, that has been there for several quarters now. So there has been a significant run-up. I think the results need to show up a potential change as far as demand is concerned and sales actually happening and profitability increasing. This quarter will probably show it. My sense is you still have 1 or 2 quarters before the companies actually start showing significant change as far as profitability is concerned. Concerns do still continue to remain as far as the transparency on a lot of their balance sheet holdings are concerned, on a lot of the land holdings that are there. So those concerns are something which will ensure that there is profit booking whenever this kind of a run-up happens. So we are cautious as far as this entire space is concerned. One must appreciate and understand still that a lot of these companies have huge debt built on their books. They're very highly leveraged. And this slowdown has really eaten into their profitability significantly, coming out of high interest costs. So yes, probably 1 or 2 quarters of any turnaround or in terms of profitability and sales would ensure that they're probably out of the woods. Till then, I'd be cautious.
Stock ideas for tomorrow morning, and for that, let's go to Gargi.
Well, Nikunj, firstly, Jindal SAW, we spoke to a couple of dealers. All of them look bullish on Jindal SAW. In fact, if you look at the last 5-day performance, a bit of a disappointment, 7% decline in the last 5 days. But remember that order inflows in the fourth quarter expected to be pretty strong. We had a word with the management earlier this month. They mentioned that they expect that fourth quarter, that's Jan to March of 2013, to be pretty strong for order inflows. Also remember that iron ore mining for that company in Rajasthan, they have an iron ore mine there. 2 million tons is the target for production in this particular year, and once that kicks in, we will see some additional revenues coming in from the iron ore front, an important trigger for Jindal SAW going forward. So keep an eye out on this one. Also take a look at Strides Arcolab, and we had seen a good performance if you look at the stock on a YTD basis, but on an MTD basis in January it's declined about 6%. Most analysts, if you look up, have a neutral or a hold recommendation on this counter. And remember that the buzz for Strides Arcolab for a long time has been the stake sale that they are going to do in one of their arms to Pfizer, and that's just a rumor. We've not got any confirmation, no development really that has happened on this front, but this rumor has been floating since a long time. We may see some development coming in on this front very soon. Most dealers, most analysts are expecting this, and this deal is expected to be on the annual. So on the back of that, some move on Strides Arcolab too.
Okay, TCS numbers have just come out, and those numbers are certainly above estimates when it comes to profit. Revenue also is marginally above estimates, but bear in mind TCS has a large base. It has a base of nearly $3 billion plus. On a $3 billion plus, if a company is growing at about 3% plus sequentially, you certainly want to doff your hat off to these numbers. Now, since TCS as a company, they do not follow a guidance policy, you pretty much will have to read into the numbers. But as of now, if I look at the basic skeleton numbers are, well, they are not too hot, and they are not too cold. They are broadly, marginally above estimates. In the near term, it is all about relative performance. It is not about absolute performance. So on a relative basis, the surprise factor is not there. Infosys, they came out with absolutely solid set of numbers. Expectations were low, and then short sellers, they got trapped. But if I analyze the initial TCS numbers, these numbers are marginally above estimates. They may not nudge the needle, but the advantage here with TCS is that it has been a consistent performer. So quarter on quarter, even on a large base, when the industry is contracting, TCS, they managed to expand their balance sheet. So these numbers will go down very well with the investors who have a medium-term view on this stock. But tomorrow morning, are we in for a huge gap up of 2-3%, 4% for TCS after the 7-8% run up the stock has seen? I doubt it very much. So TCS numbers are out. Numbers are marginally above estimates, and markets will react to those numbers tomorrow. Sandeep Agle, before we wrap the show, give us your best idea for tomorrow.
Nikunj, I would go with the HCL Tech, a buy with a stop loss of 655, target of 708, and this view is over the next 3 or 4 trading sessions.
Nipun, I've got 30 seconds before we wrap the show. TCS, a gap up, a flat open, or a gap down?
Well, I think it will be a flat open with a gradual upward movement. Clearly, I think the results TCS has been anticipated to be constantly outperforming, and this will, even though they are above expectations, it's not something which has been out of bound as far as TCS is concerned. After Infosys results, probably there was a lot more anticipation coming out of TCS. So I would expect it to open flat and a gradual upward movement, then start going after that.
All right, gentlemen, really appreciate your time and thank you for your insights. That's it on the show. Thank you for watching this edition of Markets Tomorrow.